Global wealth destruction. Capital moves at lightning speeds in today's interconnected world. And that's where bear markets and recessions create spillover effects worldwide. I'm going to show you a scary chart that plots the combined market capitalizations of all of the publicly listed companies on all of the publicly listed exchanges of the world stock markets. What you're looking at, you can see that when the tech bubble popped, we have been on an incredible global run. All thanks in large part to relatively loose monetary conditions, meaning low interest rates, and very strong economic growth globally. Markets have begun to forecast these tightening conditions and slower economic growth rates, which is leading to massive wealth destruction. That's the chart you're looking at right now. But if you look very closely to the data, here is the really scary part of the chart you're looking at. During the global financial crisis between 2008 and 2009, 57% of global wealth was lost. Now, to put that into perspective, thus far, this year, 25% of global wealth has been lost. To match the global financial crisis's total percentage loss of 57%, there could be another $30 trillion lost globally. That means we could only be 44% through this carnage using relative measures of the global financial crisis, meaning we're not even halfway through all the pain. To put this loss into perspective, money printed globally post-COVID pandemic has approached $19 trillion. And in the developed world, approximately $12 trillion. This means that the economic losses associated with stock market losses have destroyed more than all the stimulus packages provided worldwide. So the financial heroin has been all consumed. Market withdrawal is next. The US bond market chaos. It's not just the equity market that is feeling the effects. The US bond market has been decimated and is facing the largest decline in well over 2 decades. At its peak, the combined market value of the US investment grade and high yield bond market was over $28 trillion. Over $3 trillion has been wiped out thus far. I don't believe the spillover effects from these huge losses has finished their full negative effects on the general population yet. For example, if all bonds need to be refinanced today at current rates, it would cost over $1 trillion more to do so. And that leads to portfolio capitulation. When you add all these pieces together, you end up with one of the worst investment climates we have seen in modern history. The average portfolio, composed of 60% stocks and 40% bonds, which has worked for decades, is facing its largest annual loss in 100 years. If you don't believe me, look at the chart. You see that massive red bar on all the way on the far right? That's just this far this year to date. It's a pretty bad year. As I outlined in all my KRO subscribers in this month's massive report, the market internals still remain very weak. The rate warning. A year and a half ago, we wrote about the rate rise era and painted a picture of what was coming. Contrary to the mega bulls, we started to take free rides. Everyone knows the Katusa free ride. Click the link here if you don't know what it is. In many portfolio positions to take our initial capital off the table. This is ultra hard to do when everything is going gangbusters around you. Bitcoin highs, SPAC mania, meme stocks going to the moon and back. But even the forecast we posted was not aggressive enough for how the Fed acted given the massive increase in inflation. When rates rise as fast as they are right now, the recession is in the cards, and you need to have a fighting game plan for it. That's the chart you're looking at right now. This is a historic handoff of power from the market top buyers and cheap money addicts to the patient and prudent. Don't be left behind. In today's financial markets, all roads lead to Washington, D.C. I wrote this before, but I'll repeat it again. If history is anything like the past, most countries' economies will not have the economic strength to absorb many interest rate increases. The Fed is the most powerful decision maker in the world right now. Fight it at your own peril. But if you follow the moves they're making as close as I am, you can set your portfolio up for success. In today's world, capital is very mobile and moves rapidly across different asset classes around the globe. Investors are always looking for the highest return on their capital, from carbon to uranium. Nations with higher interest rates and strong economies attract investor capital, which in turn increases demand for their currency. Nations who cannot raise rates or see their economies falter in the face of these interest rates will ultimately see their currencies decline in value versus those who have strong economies and a strong currency. Ultimately, like I've been saying since the rise of America, this ultimately leads to a stronger US dollar. Now, one day it will decline, but in the near term, expect continued strength in the US dollar, and the world will look to the dollar and the US equity market. Are you prepared? Stay safe. Subscribe to the KRO, which is a Katusa Resource Opportunities, to find out exactly what prices I'm buying at and what price I sell at before the trade occurs. And you get to sell before I do. If you want to give your portfolio an edge, consider becoming a member and giving it a try for yourself.